Time now to check in with pro trader Alan Knuckman, the chief market strategist at St. Paul Research. Hello to you, Alan. You always find something positive to say about the market. What's the latest?
Well, hello, Angie. It's the end of an excellent earnings season, and stocks have stayed strong.
How about that move in Apple? That's one of your trades.
All right, let's talk about our current positions. Yesterday, Apple had its highest move since the beginning of September. So we've got the January 135 calls, and we got within $2 from that 100% profit target that we have in play there. We almost got to 100% in DuPont here in the last week, still working that order. And then FXI, the play from last week, the March 37 calls, were 10 cents away from our 50% first target.
How are your other trades coming along, including your airline play?
Let's talk about the other plays. We've got HAL, American Airlines, flew to 22 before starting its recent little profit-taking pullback descent. That's January option. And also NEO for January, essentially unchanged, with AT&T trying to make a bottom base. But again, it's a June play.
What's your latest trade for us, Alan?
All right, today's trade trigger, Halliburton. Now, we've been patiently waiting for oil to back off a bit and stall, and you see it oscillating around this $80 level. Now, Halliburton's a stock that's 10% and plus off its October 25th peak of just a few weeks ago, and it's also down 50% over the last 5 years versus the S&P up 100%. So even though you're seeing gas prices move up, a lot of these energy stocks still have a lot more upside. This stock was at $50 in 2018, and it's down here at 23 or so right now. Now, looking at this technically, it's been between 18 and 24 for most of this year, with a 21 midpoint to keep an eye on. So if it breaks out of this range, we target 30. So we're looking at the April $20 call, just below that support pivot. That $20 call is trading for around 4 or so. The expiration break even, because it's $3 in the money, is about $1 higher with 5 full months of time. So it's only $75 more expensive to buy the April option versus January. So as we've said before, buy more time than you need, enough time to be right.
That is one of your favorite trading strategies. What about your trading day takeaways?
All right, trading takeaway number 1, 2050. Not the year 2050, that's way out in the future, but the S&P was 20 points away, and the NDX, the NASDAQ, was 50 points away from its all-time highs here yesterday. So we're closing in on those tops once again. Number 2, golden. We haven't been able to say this for a long time. Finally, gold has bounced back and made multi-month highs, 6-month highs. It's the last asset that we track to finally ascend. And number 3, turkey time. Don't be a turkey. Stick to your money management plan. Put in your targets. We recommend 50% on your first half, 100% on your second half, because modest moves in these underlying stocks produce big gains in the options, and we want to sell on strong days.
Thank you for letting us gobble up your trades today, Alan.
Thank you.
Go to businessfirstam.com for where to see our show on TV.